Thank you for choosing to watch this video. For more videos on the latest stock market news updates, press the like button and subscribe. With that being said, let's dive straight into today's stories. President Biden issued an executive order on artificial intelligence. This significant federal action represents the first of its kind, and it's aimed at introducing regulation to an industry that is largely operated without stringent oversight. One of the most significant implications of this executive order is that developers of advanced AI models in the future will be required to submit safety test results to the federal government to demonstrate that their creations do not pose a threat to the public. Additionally, the White House will be tasked with formulating guidelines for federal agencies to enhance privacy protection practices related to artificial intelligence and machine learning. However, President Biden has made it clear that the responsibility for enacting consumer privacy regulations for the AI industry lies with Congress. The executive order further seeks to standardize the utilization of AI within the government by simplifying the procurement process for federal agencies to acquire AI tools and hire AI experts. It also allocates resources to support small-scale developers and researchers, with the aim of preventing a handful of large corporations from monopolizing the AI industry. It's important to note that while this executive order represents a significant starting point and sets essential norms for the AI sector, it primarily consists of recommendations and contains some guidance that the executive branch cannot enforce. Consequently, the practical effectiveness of these directives remains uncertain. Moreover, the executive order's influence is limited when it comes to international AI developers, as it primarily pertains to the regulation of AI within the United States. You should also know that the Autoworkers Union has reached a preliminary agreement with General Motors, marking the conclusion of negotiations with Detroit car manufacturers. Before this, Ford and Stellantis had already reached tentative agreements with the United Auto Workers Union. This development comes after a 6-week strike that GM estimated was costing the company $200 million per week. It's important to note that while these tentative deals are in place, they still require ratification by the union members. The proposed contracts span 4 years and appear to be significant victories for the UAW, as they secure the largest wage increases in decades for their members. In other news, over in the tech world, Apple aims to boost its computer sales by introducing a new line of processing chips for its Macs. In line with the Halloween-themed announcement, Apple has dubbed these chips Scary Fast. The Macs equipped with these faster chips are set to become available next week, and Apple is banking on their popularity during the upcoming holiday season, following a 7% decline in Mac sales during the last quarter. Furthermore, Apple is also lowering the prices of some of its computers, with the 14-inch MacBook Pro now priced at $1,599 compared to last year's model, which cost $1,999. In the context of rising living costs and consumer preferences, McDonald's has managed to deliver a strong earnings report. This success can be attributed in part to menu price increases. In fact, at one location in Connecticut, the cost of a Big Mac combo has reached $18. McDonald's reported $6.69 billion in global revenue for the third quarter, which was a 14% increase from the previous year, surpassing Wall Street expectations. The CEO of McDonald's, Chris Kempczinski, even emphasized that these difficult times actually present an opportunity for the fast food chain. In the United States, McDonald's has gained market share among middle and high-income customers who are opting for fast food over pricier meals. On the other hand, lower-income customers making less than $45,000 reduced their consumption of Big Macs in the third quarter, but this dip in foot traffic was offset by the higher menu prices. McDonald's also attributes its earnings success to recent marketing campaigns and its utilization of the mobile app, delivery services, and in-store kiosks, which collectively accounted for 40% of the third quarter sales. Looking ahead, McDonald's plans to increase menu prices in California next year to counteract the impact of the state, raising the minimum wage for fast food workers to $20 per hour. Moving on to financial news, SoFi Technologies saw its stock jump by 6.9% in early Tuesday trading after Morgan Stanley upgraded the stock from underweight to equal weight. This upgrade came following a decline in SoFi's valuation below the firm's price target. Analyst Jeffrey Adelson's assessment of SoFi's third quarter results also contributed to the more positive outlook. In particular, SoFi's Q3 net interest income exceeded expectations due to faster loan growth, strong deposit flows, and the ability to originate loans at higher yields than anticipated. Additionally, the prospect of loan sales in the fourth quarter may reduce the risk of a near-term capital raise, while efficiency is improving more rapidly than expected, and student loan refinancing originations outperformed expectations. On the healthcare front, Beam Therapeutics experienced a notable surge of around 22% in pre-market trading following its announcement of an agreement with Eli Lilly. This agreement involves the sale of certain rights to gene-editing drug candidates that Beam is developing in collaboration with Verve Therapeutics. Specifically, Lilly will acquire product rights related to Verve's cardiovascular in vivo gene editing programs targeting PCSK9 and ANGPTL3 genes, as well as a third undisclosed cardiovascular disease target. In return, Beam will receive an upfront payment of $200 million, along with a $50 million equity investment. Furthermore, Beam is eligible to receive up to $350 million in milestone payments through this partnership. This agreement marks Eli Lilly's continued exploration of gene editing, following a previous deal with Verve to advance a preclinical in vivo gene editing program. In the biotech sector, shares of CRISPR Therapeutics were put on hold for trading as an FDA advisory committee convened a significant meeting to discuss the approval status of a gene editing candidate developed in collaboration with Vertex Pharmaceuticals. The gene-edited therapy, known as exa-cel, is currently under FDA review for the treatment of severe sickle cell disease, with a target action date set for December 8, 2023. The FDA's Advisory Committee on Gene Therapies convened to discuss the biologics license application for exa-cel. Although their recommendations are non-binding, the FDA typically considers them before making final decisions on authorizations. If approved, exa-cel will become the first FDA-cleared gene editing therapy in the United States. Shifting to the technology sector, Palo Alto Networks has announced its acquisition of cloud security startup Dig Security for a reported $400 million. Dig Security specializes in data security posture management, offering organizations tools to discover, classify, monitor, and protect sensitive data across cloud data stores. This acquisition reflects Palo Alto's commitment to expanding its cybersecurity offerings in response to the growing demand for digital security. The cloud security market is estimated to reach $76 billion in 2023, with the worldwide cybersecurity market growing by 12.5% year-on-year to $18.6 billion in the first quarter, outpacing the broader tech sector's performance. Palo Alto Networks has extended its market share to 8.7%, growing by 23.6% in the quarter. Reports had indicated Palo Alto's intention to acquire both Dig Security and Talon, both based in Israel. Dig's capabilities will be integrated into Palo Alto's Prisma Cloud platform, enhancing real-time data protection from code to cloud, as companies increasingly transfer more data to the cloud. Thank you for watching the entire video. If you made it this far, please comment your thoughts down below regarding your favorite story from today's stock market updates. With that being said, I wish you the best of luck and happy investing.